All right, hope everyone's having a nice weekend. Looking forward to another market update. I'm going to be going through a fairly concise agenda, I think, here. We're just going to go through a chart I've been following for years, dollar in relation to Bitcoin. I'm going to then look at the S&P 500 denominated in money supply and a signal that's confirming as we speak. And then I'm going to look at Bitcoin on its own. I'm going to look at yields, and then we're going to call it a day, folks. I don't take structures like the one I'm depicting here right now, and this is a monthly chart of the dollar on top, and this Bitcoin illustrated here on the bottom in line format. And I've been talking about this for a while, right? I've been talking about this relationship that has existed in which the dollar historically has gone through, up buying climaxes, uptrends, whatever you want to call them, uh, over the course of months, years, right? And I'm just kind of outlining what those look like um, in terms of those uptrends on the chart and what has happened with Bitcoin. And it's not necessarily a surprise. We generally see more often than not a positive correlation between the difference in direction that these two move. And so, what did Bitcoin do if we just look at that uptrend? What did Bitcoin do during the uptrend? What did Bitcoin do during the uptrend? Okay. So this is what we're focused on right now. That's all this exercise is. Are these coincidences? Are these a set of coincidences where Bitcoin hit an all-time high and then started its downtrend to hit its low during a period in time on a monthly where the dollar was in its strongest uptrend? Okay. Are these coincidences in 2017? 80% peak to trough, 80 plus percent, 80% before, 85% um, in 2021. Now, mind you, we had Bitcoin make an all-time high in November of 2021, but that was what I've always contended was a B wave rally, bear market rally. And so these set of coincidences are not coincidences, okay? And just a reminder, you all know I'm not a financial advisor. All these things that I talk about, they could go up, they could go down, they could go sideways. I'm just here as I have been for the last several years, kind of giving you my convictions, my ideas on the market. I started doing these videos on YouTube when Bitcoin was 28, 29, down to 24, 25,000. Um, and if I'm being honest, this was the moment that I was thinking was going to come way sooner than it did. Way sooner, to the tune of, let's just call it a year, maybe. I'd been saying I was looking for an all-time high in Bitcoin prior to the halving, and I thought it would go much higher. Um, And to an extent, it did, right? It did. It got over the all-time high and got into the low 100,000 region. But what's been weighing down as part of the formula has been what's been transpiring here in the form of this complex redistribution that's lasted far longer than any of the prior two that we've seen before it. And shame on me, right? Shame on me for not realizing or not being open to the possibility that as markets evolve, they get smarter and they get less predictable, as they should. But there are several underlying characteristics, even within the unpredictability of markets, that hold true in terms of structure. Okay. And so timing is less important as structures. And what do I mean by that? So these structures, the timing wasn't important here, right? Timing wasn't important here. It was these were the most severe drawdowns in Bitcoin. Timing was less relevant here, right? Timing was less relevant and the extent of this move was less relevant. Okay, so let's say I was forecasting what I'm getting at. Let's say I was forecasting the dollar to do this, but it stopped short and got here, right? Point being, Bitcoin still dropped 80 plus percent, right? Regardless of how far or how quickly or how long I thought it would take the dollar to get up to where it did in October, November of 2018. This buying climax was relatively muted compared to this one. This one was parabolic compared to the prior two. And this one was far more, the one that we're coming out of now, which is my claim, is far more complex than the ones that we saw before it. However, the the overall properties of what we're looking at here are the same. Okay. And what are they? In a distribution, you have a buying climax, okay, buying climax, and this buying climax was quite the buying climax. And then you have this range. You have a range, you have a range, you have a range, you have a range. And the range, again, um, the range is for the most part, I think gets people to think this is refueling, right? Oh, this is flagging and getting ready for the move up. This is flagging, right, and getting ready for the move up. And everyone was telling me that this was, getting ready for the move up. Dollar is going to break out again. Dollar is going to break out again. Dollar is going to break out again. And I kept saying, no, no, no. I'm expecting this to be, I'm expecting an upthrust to come in, and I'm expecting the dollar to eventually resolve itself in the opposite direction as the buying climax that came into the range. Okay, and so that's been the expectation. That's been the expectation, and this has been the expectation the entire time. And so uh, let me get Bitcoin back in the picture here. And so where are we now? Where are we now? We finally had we finally had a confirmation on this upthrust. Sorry, let me get this Bitcoin chart back in the picture because this is really important. Uh, mhm. We finally got this confirmation last month, and here we are. Here we are with the month isn't confirmed yet. It's April. It isn't closed, but we have the 30-month simple moving average, okay? And I've illustrated what's an upthrust, first of all. An upthrust is basically a fake out, right? Where all the liquidity above is taken. And basically, it's tricking the market into thinking we're breaking out. We're breaking out when in fact the intent is the opposite. The opposite, uh, the intent is masked, and the intent here was to go in the opposite direction. And that's what we've seen occur so far. And when this 30-month simple moving average was breached after the upthrust in the last two macro ranges, what happened with Bitcoin? Bitcoin did a 5x. What happened the instance prior to that? In June 2017, Bitcoin did a 7x from that point. These are major moves. These are major moves. And so here we are today. Not only have we failed that 30-month, we've dropped out of the bottom of the cloud, and we've dropped out of the bottom of this range. Okay? So we're very similar in structure of price as we were kind of in these legs right here. And to kind of put a like where are we now potential to that to this exercise, August 2020. How did Bitcoin do and Bitcoin related proxies do, or even the NASDAQ do from October 20 through the end of the year? Let's go back to the same level here, July of 2017. How did Bitcoin do from July 2017 to July 2020? And so worrying about all these little micro movements on a daily basis in terms of PA on Bitcoin is silly to me. In fact, I'm doing the opposite, right? As people are wondering how low can things go, and people are giving advice like things like being cautious in the market. My what I've been doing positioning wise is the opposite. I've been getting very aggressive. I've been getting very aggressive over the last several weeks, culminating into last week, and I let the members kind of gave them some insight into some of those aggressive positions. But I'm of the opposite mentality, okay? And so here we are to the next point in the story, and that's looking at a chart of the S&P 500 denominated in M2. So money supply, okay? Money supply. And this is a monthly chart I have up here, folks. And so I continue to hear things like, um, again, think wall of worry classics call outs where, how far are we going to go? We're in a bear market, or I'm going to wait until, the summer lows. Like a lot of the assumptive closes of what's happening, what's confirmed, or what's going to happen being that of either more correction or new lows coming. Meanwhile, if we look at the chart that I've got presented here, it tells us the lows are in. The lows are in, and potentially a generational opportunity was just given to us over the last 3 or 4 weeks. Generational opportunities are not obvious. They are in hindsight. And when someone shows you this chart, maybe in a year, maybe it will look obvious. And this is my claim. This isn't a fact, okay? This is my claim. But if I'm looking at this chart, it tells me we are in a similar position in terms of risk asset pricing denominated in money supply as we were in 1996. Folks, what happened from 1996 to 2000? It was one of the greatest returns in the history of the stock market within a 4-year period. Okay? And here's what assets priced in money supply. Let's go back to 1967 because this is really important. This was a pattern that essentially took 30 years, okay, to resolve itself, where you had a preliminary support, and that was breached. That support was turned into resistance once, twice, 3 times. And then you start going down, you're correcting, you hit a bottom, okay? Then you start slowly coming out of the bottom, and then you have a breakthrough of this we're talking a 30-year macro reaccumulation denominated against money supply. And then you have a check back, a throwback to this level. This is where I think we are right now. And why do I say that? Well, let's look at the chart. I don't know about tariffs. I'm not a tariff expert. I don't know about recessions. I can't forecast a recession. I can't tell you we're in one, we're going to be in one. I don't know anything about any of that stuff. I'll leave all that. If I was following the narratives back in October 2022, I would not have gotten as aggressive as I did from a positioning standpoint because the narratives were telling me we're going the opposite direction. And so narratives to me are just ways to disguise what potentially is really going on. And a chart like this is what filters through a lot of that noise, in my opinion. So now let's go to blow off top in the 2000s, the dot-com bubble burst. We have preliminary support, PS. Okay, we break through it. And then what happens? We check back, and that's resistance, okay? And then we come back up to it. And mind you, we're talking 2000 to 2024. It's almost 24 years of a reaccumulation event here, folks. This is what people are failing to grasp in terms of what potentially I think is in front of us and why traders are going to be awful in this environment. I'm going to tell you that right now. If you're actively trying to trade this environment, when I mean trade, I don't mean like 3-month, 6-month, year positioning on some swing stuff. I mean, if you're actively trying to use headlines or look for confirmations, this is going to get very difficult. Game mode is going to get very difficult for you. Okay, 1, 2, 3, 4, 5. Okay, 5 points of resistance, right? We had a selling climax, a secondary test in phase B, a test. Basically, what I'm illustrating here is a macro Wyckoff reaccumulation. LPS. We just broke out of this entire base. Okay, that's what we just did, and we just threw back to it. So what we have set up here, and here's our 30-month moving average. Okay. much like we saw the throwback in 1996. So when I keep hearing, and I hear two camps saying we're either blowing off really fast, or we're in a recession, or we're double topping, or we're going to have a failure. All these people I think are going to be wrong. All these people I really believe are going to be wrong. I believe what we're setting up for is potentially one of the greatest rallies we've seen in the history of financial markets since the late 2000s. And this chart is one of the best indicators I have. People ask me about, what indicators you use. Well, most indicators are simply derivatives of price. This is price, okay? This is the strongest indicator, one of the strongest indicators I have right now, right now. So does it mean we're going up tomorrow, Tuesday, Wednesday, Thursday, next week? I don't know. I don't really care. But it does mean I think the lows are in for stocks. And I think the next move is going to be higher, faster, steeper than we've seen, as I said, since 1996, 1997. Don't screw this up, folks. All right, next, Bitcoin. Bitcoin. I mean, look, this is the same chart that we've been presenting for months now. It's the strongest technical setup in all financial markets. That's objective, in my opinion. So that's probably subjective. I'm heavily biased. But we continue. I'm barely hearing anyone talk about Bitcoin, and yet this is the entire macro structure. A big move is coming, and it's coming very soon. I don't know if it starts this week or not. I don't really care. I know I'm positioned, and I've gotten positioned for it, and I've used the weakness over the last several months to get positioned for what I think comes next. But this is not to be trifled with. This macro reaccumulation, cup and handle, breakout, throwback. I mean, that's all this is. That's a throwback. Yeah, everyone wants a throwback to 63K. Yeah, retest that entire resistance as support. That's trader speak. Do traders get what they want? No. Do confirmations look good in real time? No. I think the market's gonna move, and I think it's gonna move fairly soon here. I think the lows are in. My revised targets on Bitcoin are between 300 and 400K. Not too much to update there. Yields. Again, I continue to hear like Powell needs to do this and fire Powell. I don't understand. I really am just very confused with a lot of this, the talk. I really am, because again, much like the dollar was telling me we're in an upthrust months ago. Remember me saying that? And I'll admit I was late. I missed the move to the upthrust from the summer to December, but I didn't back off on my stance there. And the same thing is going on here with yields. The bond market is telling us rates are going down. Here's a 10-year yield, and this is the same chart as the dollar with some nuances. We have a macro range, okay? We have a macro range. We have an upthrust early in phase B. We have a last point of supply. We have a last point of supply failed breakout. I talked about this little head and shoulders. I said when we dumped on yields here, I said I would not be surprised to see a check back all the way up to this region where I had LPSY. That's where we are. We didn't close over the 30-week moving average. Just below it, I think yields are set to make a major move down next. And so for yields, for me, I keep saying this path is what's next for me. And so we're going to keep an eye on it, but I don't necessarily care if the Fed does anything. I mean, didn't the Fed cut rates in the fall, but mortgages went up? I mean, so what are we saying the Fed actually has an effect on interest rates? I don't know. I think this chart tells us more about who has an effect on interest rates than anything. And if I'm looking at this chart, I'm saying interest rates from this point, from where we are now, are going down. Okay. That's it, folks. That's the weekend market update. I hope you have a great rest of the weekend. Take care.